Hey, kia ora everyone, Chris Farhi here from the Bayleys Insights and Data team. I'm sitting here today with Stuart from our Bayleys Property Services team to have a chat about the latest trends, particularly in the residential investment market. But Stu, quick intro for those who don't know you. What do you do for Bayleys?
Yeah, thanks, mate. So I look after both the resi and the commercial property management side of the business throughout New Zealand.
Yeah, cool. And so obviously that's a pretty big role, big portfolio under management at Bayleys. In terms of if we start to hone in on the residential in particular, what's the sort of scope of what we're managing at the moment?
Yeah, well, we've just had a new lens on the national business, and we're currently at about 4,200 properties under the Bayleys brand.
Yep.
And if we extend that out to about 9,000 once we bring in some of the wider whānau eaves in the Bay of Plenty and the Waikato, and some other franchises. So yeah, we're growing.
Yeah, no, awesome. And so I guess it gives us a pretty good position to talk about the residential investment market and what's happening there at the moment. For those who've been watching our channels, you would have seen recently we had the residential investment report, which we put out in association with, I guess, both of our teams. But if you were to describe the state of the residential investment market at the moment, what sort of comes to mind?
Yeah, it's a tricky question, mate, because there's a lot of mixed indicators, and I think that's probably a good example of the uncertainty we've got going on in the market right now with an election coming up. But for us, as a professional manager, we're seeing some really good growth each month in terms of number of homes that we're managing. But again, I think that's probably a reflection of people getting a little bit tough with managing properties at the moment. There's a lot of stuff that goes on in that space now, a lot of regulation that's changed, and it's been a little bit hard for people to do that themselves.
Yeah.
And so now that's been good for our business, but we're now seeing that resulting in some of the stock coming out of the market, people selling now as well, because of that. Their challenges with some of that work that they've got to do is actually meaning now that they're going to sell. And
yeah, so it just sort of gets a little bit too hard for them to take on themselves. Yeah, and so the changes that you're referring to, so there's this build-up over the last couple of years. Healthy home standards was one of the big ones, and then you had the move into some of the tax regime, interest deductibility, bright line test, and that type of stuff. One of the ones that we hear quite a bit of around the market is the interest deductibility and how that's impacting landlords and the sector generally. What sort of trends are you seeing amongst landlords in terms of that issue in particular?
Oh, look, it's probably been of all those changes you just mentioned, and I think Jen Beard said it at the REINZ a little while ago in a podcast of hers that there've been something like 29 changes in the last 3 to 5 years. So you can understand people are suddenly faced with a lot of stuff they've got to do now as owning their property. But the tax deductibility has certainly been one of the biggest influences in people's decision making.
Yeah.
Of whether they want to get back into the market because of possible changes coming up in the election, that they could reverse some of those changes, and we suddenly find that those attractions are back.
Well, we definitely perceive that in our latest research. You've got this kind of wild card at the back end of 2023 where if there's a change in government, could well be a change to those interest deductibility policies, which totally then changes the game in terms of the financial return on yield for investment properties.
Absolutely. It is. Everyone will be very front of mind for everyone. I think that leading up to that, because obviously we don't know what's going to happen with the election, etc. What we have seen though, and really what the government wanted to intend, was to get a focus now on the new build space.
Yep.
So they still retain that tax deductibility. So people we have seen, so Susie Wigglesworth, who runs our projects team, when I was talking to her the other day, we're starting to see a re-emergence of some of the private investors at some of the open homes and the display suites we've got out there. So that's been quite interesting now that we are still getting that support to that new build space.
Yeah, so it's almost like a pivot in terms of interest. Yep. And one of the other things that came out for our latest research was that the new build homes, because they're more intensive, quite often the rental yields are a bit higher because you're sort of making more efficient use of the space for rental purposes, which is exciting. And so then one of the other sort of subtler things that's come through the market has been the removal of the no right terminations for landlords. So if you went back a couple of years ago, the landlord could effectively give 90 days notice to terminate a tenancy. Government's obviously removed that in order to help provide more tenure security to tenants. But we started to see some subtler issues come through in terms of what that means for like tenant selection, and the management of properties. Do you have any insights into that space?
Look, it's certainly, as I've gone around the country meeting with different franchises and teams that we're doing the RPM space, RPM being the Resi Property Management, it's certainly one of the biggest discussion points. And again, with the runway up to the election, there's a lot of hope in some camps in the industry of that being reversed. Because it's certainly put a bit of a strain in the space. When I was in Queenstown a few weeks ago with the Chamber of Commerce down there, it was very evident. You just see the crisis down there of people sleeping in cars because of not having that stock for rental. A lot of landlords now are feeling that they've lost that flexibility, and so some stock is now coming into the Airbnb space that could be a better place for the rentals. So it's putting a lot of pressure on local markets like that. It's definitely something that there's a lot of people in the industry that are eagerly awaiting what will happen in the election as to whether that possibly gets reversed out. Yeah,
it's quite interesting as well, because I think that also pushes tenant selection right to the top of the agenda in terms of management. Because once the tenant's in place, if there are problems, and it's not necessarily, like rental default or those sorts of things, because they are controlled, but it's more problematic tenants, you're effectively stuck at that point. So you can see how that's a challenge.
Yeah, and it's created a very lively debate throughout the country, whether you're talking to tenants and their representatives or the landlords. I can see both sides, and it has created a lot of pressure. So again, it will certainly circuit break a lot of things depending on what the outcome of the election is. So yeah, watch the space.
We're just joking for a second. There was you might have heard a bit of happy birthday singing in the background. We've got David Bayleys' birthday today, so that's obviously a bit of a priority. So good times. And so Stu, two other topics that are interesting is migration and also regulation of property managers. So we've got this big migration boom coming through the market at the moment. Are we seeing like a boost in rental demand?
Yes. This is some question, particularly here in Auckland. But it's interesting because a lot of people, when they're arriving in New Zealand, generally Auckland is where they'll land, and there's this big expectation of wanting to, lay roots down here, but quickly realise as well that, like all of us, that the affordability is a little challenging. Trying to find that rental can be a little bit challenging as well. And so what we're also seeing from our regions is a bit of a spread of some of those arrivals starting to get into other markets that are a bit more affordable for them. But certainly, back to what you're saying, the rentals have certainly been reflected as an upward pressure because of the demand basically outpacing supply. Yeah,
that's interesting. So you might see a trend where we get a bit more regional distribution of some of those migrants off the back of a tighter rental market. So it's something maybe to watch. And then final point, we've got this regulation of property managers coming in the next couple of years. What does that mean for the market, and I guess specifically landlords?
It just means a whole bunch of good stuff coming. It's a really, really positive new requirement for the market. It follows similar to what happened years ago with the REA coming in and regularising the sales agency side. So what it basically means for landlords is that you're going to get property managers more regulated in terms of meeting minimum standards, and that could be ensuring that they have trust accounts in there that manage that receipting of income, payment of bills, etc. But what it also does is it will start to kind of wean out perhaps businesses that have been possibly not putting those efforts into those minimum standards. So it's again a protection for the landlords, but equally protection for the tenants, ensuring that their rights are being looked after under the RTA by qualified property managers. The big thing will be whether eventually the big iceberg of owners out there that continue to manage the properties themselves, whether they eventually get captured in that scope. They don't at the moment in the draft regulations coming forward, but watch the space, because obviously we still have a huge amount of owners out there that choose to manage them themselves.
Yeah, and you see that through a lot of the stuff with like Tribunal, quite often involving landlords that are owning their own properties and accidentally sort of fall outside of the residential tenancy there. Well, look, with that said, we'll wrap it up here. So thanks very much for your time, Stu. Really appreciate it.
Totally, man. Thanks for having me.
Yeah, no, all good. And we'll see you guys next time. Ciao.